Welcome to Market Maverick Talks, a father and son podcast examining today's most innovative companies. Before we start, please make sure to read the full disclaimer in the notes below. We are not financial advisors, and anything we say should not be taken as formal advice or a formal recommendation. In today's episode, we'll be covering a company that counts Netflix, Temu, Google, Amazon, and many others as customers and is crucial for their expansion in the Latin American, South Asian, African, and Middle Eastern countries. In these regions, there are billions of customers who are ready to buy, but traditional payment solutions cannot reach them. That's the challenge, but today's company, dLocal, is the solution. dLocal is a fintech company based in Uruguay run by longtime former Mercado Libre CFO Pedro Arndt. They enable many of the largest global merchants to accept payments and distribute funds using local payment methods to customers who live in emerging markets. They have over 900 payment methods available and operate in over 40 countries. Let's look at how they help Amazon. So for Amazon, dLocal allows merchants outside of Brazil to sell on the Brazilian marketplace. Before this, Amazon's Brazilian site was limited to local suppliers. dLocal's role is its payment infrastructure allows Amazon to accept a wide array of local payment methods. Not everyone has access to international credit cards like Visa or MasterCard, but rather in Brazil, people pay with a government-sponsored digital payment system called Pix, or with cash voucher payments like Boleto Bancário. dLocal's competitive advantage is that it has licenses and regulatory knowledge in these 40 plus countries to ensure that Amazon can pay its sellers in US dollars despite customers' payment in local currencies. Looking at dLocal's Q1 2025 financial update, and it looks quite good. Revenue increased to $217 million, with revenue up 18% year over year. On constant currency, that'd be up even higher, on 36% year to year. Gross profit increased higher than revenue, so that's good to see. That's primarily driven by favorable performance in Argentina. They're really doing well financially. That they've announced a dividend. So they paid a special dividend this year of 0.525 per share, which is roughly about 5%. And they committed to paying a percentage of their free cash flow in the years ahead. However, when I evaluate dLocal, the two financial metrics I care most about is total payment volume and net take rate. So total payment volume, this is how many dollars are going through dLocal's API, their platform. So if it's increasing, that means the global merchants are using them more. And this is great. They're up 53% year over year. This is the second consecutive quarter that's been up over 50%. And most of this increase is due to their existing customer base. Their net retention rate is 144%. So the existing customers are spending 44% more than they did before. And that's good because that means it's the customers like it, the moats stick in, and they're not just constantly chasing new customers in order to grow that volume. The one metric, though, that is not great is the net take rate. It continues to decrease. It went from 1.2% to 1.05%. So what this is of all the volume, all the dollars that dLocal processes, what percent do they take? And right now, out of every $1,000, they only get $10.50 in terms of revenue. So that's been one of the key metrics that's really hurt dLocal's narrative in the short term from a stock performance is the net take rate's been going down, and management's been citing that a lot of it's due to customer mix. So that's just one thing we want to monitor moving forward to see, does it stabilize? So to summarize, three things that we're going to be monitoring in the quarters ahead is what we just chatted about. So first, the total payment volume, we want to see that continue increasing. And currently the net take rate has been declining for the past couple of years. We really want to see that stabilize. Second is more of the long-term tailwind, right, for emerging markets. One of the big pluses of emerging markets is 90% of the global population under the age of 20 will reside in the emerging markets, is the expectation by 2050. And these regions will make up 65% of the economic growth by 2035. So lots of growth, lots of opportunities in emerging markets. The cons, though, of emerging markets is There could be geopolitical risks and extremely high inflation that we don't have in developed countries. So definitely keep up emerging markets. It's got its pros, it's got its cons. Um, so just more to watch out for. And then third thing to monitor is dLocal. Are they going to continue to innovate? Are there more and more integrations, more and more payment methods in countries that they're applying for licenses for? So right now they have 40 plus countries, 900 plus local payment methods. We really want to see that keep going up. They announced as part of their Q1 2025 update that they have an intent to acquire Aza Finance to really increase their capabilities in Africa. So that's good, and hopefully more is coming. So looking at dLocal's stock chart, and you can see that's quite volatile. So looking at the past year, it's up 41% from a year ago, but really right around earnings is when you'll see a lot of volatility. So looking at the February 27th earnings update, you can see that it dropped from around $13 to under 10. So it's a big drop off. But then also in the May update for Q1 2025, you can see that it increased when dLocal announced a surprise dividend. So that gave some confidence in as well. And now it's kind of stabled off. So right now it's trading around $10 and change, really in the midpoint between the 52-week range of 657 and 1427. I'm looking at their market cap. They're trading at 3 billion market cap. So still quite a small company. I'm doing about $800 million in revenue, growing at revenue at 20+% a year. So pretty solid price to sales ratio. And then really looking at price to earnings, so they are profitable. They are trading at a 22 PE. So that's one thing that is kind of nice just to start evaluating how's that PE ratio doing. Are they getting more profitable? So their PE ratio should be reducing down. Now I'm going to pass it off to my dad, John, to look at some of the stock's technicals and other metrics he looked at before sharing our thoughts on dLocal.
Yes. Okay. Now looking at the chart, I have Bollinger Bands in there, which I will explain later. But first of all, the red line is the 200-day moving average, and the blue line is the 50-day. And usually the 200-day is the one you really want to look at. That's kind of the one that initially you look at, that I look at. Now you look at whatever you so choose, but that's what I usually look at, is the 200-day first. And as you can see, at the moment it's still above the 200-day moving average, and actually it's right at the 50-day almost, because it's I believe the price was 10.85 and the 50-day is 10.9. So right now we're at a very important juncture. So I would say that I'm at this point with this chart, I'm neutral on it at this point with looking at this chart and this information. So going to the next chart, yeah, as you can see, the last 4 quarters, it's missed on 2 of them, and it really moves. It really seems to move a lot with the earnings, and earnings are coming up. I believe it's the earnings date is August 13th. So we'll keep an eye out for it. Anyway, the debt to equity is very low. It's about 1%, which is very low. If it's below 25%, it's considered good. So there's virtually no debt. So that's a good thing. And looking at the analysts that I follow, there's 1 strong buy, 4 holds, and 1 sell. And let's see, what else did I want to say? Yeah, I think that I'm pretty much a wait and see right now, because it seems to really depend a lot on assumptions that emerging markets is going to grow, and that I know that the age of people in their 20s by, I think it was year 2035 or something like that, or 2050. I can't recall the exact one that my son Scott was mentioning, but anyway, there's a lot of assumptions. It's saying that by this date, the most of the earnings, most of the growth is going to be at this year. So it's a lot of assumptions. So right now, I'm a wait and see on dLocal, but let's see how things go, but I'm going to wait and see on it. Scott, do you have anything else to ask, or do you have any questions?
Yeah, I guess what would you want to see in the quarters ahead to make you excited to want to add dLocal to our portfolio?
Well, I would like to see that it beats, and I know that it's very difficult because of the currency fluctuations and stuff. I know that it does really well in the countries, but then when you pull it back to the U.S. currency, to the U.S. dollar, then that's when it could cause some problems because of the currency fluctuations and such currency. So I would say that I'd like to see it beat, and I know that they're doing really well in the countries they serve, but I am concerned about the profit margin and stuff that it's keeps seems to keep going down. Yes. So in other words, it has to keep beating on earnings, and the profit margin has to stay stable to hopefully start going up a little bit. That would make me consider an accumulate position.
Got it. Now those are fair points. I'd say for me, I'm a bit more optimistic on dLocal. I think overall, it's what you're most concerned about is what I'm most excited about is the long term tailwind, right? With emerging
Mm-hmm.
markets, the booming of emerging markets, and the reason for that is in developed countries like Western Europe, United States, and even to an extent China, there's only so many consumers, so many products that can be bought, and right now the emerging markets are in its infancy. I think example of that is, I mean, look at the top two countries for consumers of WhatsApp is India and Brazil. So digital
Okay.
transformations are happening, very tech savvy, and the populations are growing, and the middle class is growing. So I do think that it gives an opportunity for global merchants to expand, right? And it's one of those things where it's one of the very few companies, and what drew me to it was actually two things. But the first is Amazon,
Mm-hmm.
Uber, Microsoft, Google, Netflix, Booking. Then you have the Chinese players, Temu, Shein, Didi, Tencent. All are so using the platform, right? They're among
Right.
the global merchants, and if these
Okay.
brilliant companies are seeing value and getting in emerging markets, that kind of gives me confidence that okay, maybe this emerging market theme is onto something. So that's one aspect of it as well, and I think overall, I get the net profit, and unfortunately, I think the sentiment is going to be that if that net take rate profit margins don't stabilize, then unfortunately the short term stock price might get hit. Um, so I think that's part of the narrative. But for me, I love to see total payment volume grow. Right, if total payment volume grows if the net retention rate is 144%. So current customers spending more. That tells me that emerging
Sure.
markets are growing, people are buying more, and this is a company that decline profit margins. One of the things that would worry me is okay, if you're declining profit margins, is it because it's not necessary anymore? People don't see value in it, so there's pricing power on the buyer, which I don't think is the case, right? Because total payment volume shows it continues to
Yeah.
increase. And then the other aspect is competition. Is there somebody who can do the exact same thing as them? And
I don't think
and
so.
maybe there is, right? But
Mhm.
they have such a plus list of customers, and they're so customer centric. And it's there's a reason, right? Amazon likes to do everything themselves, and for this they decided, okay, let's pay the couple percent margin to dLocal. It's not worth it to try to get licenses and to really integrate and get all these hyper local solutions like Gcash in the Philippines, Pix in Brazil to enable payment. It's just really tough for these countries to do versus just outsource that portion and let dLocal do it. I'm not as worried about the profit margins because I do think that emerging market, the size of the pile, can you continue growing, and this is not a business that is at risk where compressed margins are a sign of not customer interest and lack of customer. So that's one reason that drew me as the A plus customer. And the kind of last point that I like is what drew me to this company is the CEO Pedro Arndt. He spent 24 years at Mercado Libre. He was one of the
Right.
early
Yeah, that.
employees at Mercado Libre,
Yeah.
and he was our CFO, and he grew Mercado Pago, right? He knows what he's doing for fintech. He's very good at executor and strategy, just the perfect blend of that of growing at the right price, right? And they're profitable. I mean, how many companies where, constant currency, they're growing consistently above 20%, right? Total payment volume has been greater than 50%, but from a revenue constant currency greater than 20%, trading at a PE of 22 and able to, at such a small point, have enough free cash flow to generate a dividend. So things like that just give me confidence that financially he's going to be investing in the right things. They're not innovating, right? He's continuing to integrate more and more. They're getting more and more licenses. They're enabling more and more payments. They just acquired issued an intent to acquire Aza Financial to open up more in Africa. So it's
Hmm.
going to be interesting to see where even if they don't add more customers, which I think they will, right? But if they don't add more customers, if the customers in the emerging markets spend more money and that total payment volume continues to increase, that's going to make a bigger amount of free cash flow that they can pay out. And I think the biggest risk is actually for me that would limit this company for our portfolio is if somebody like a Fiserv or Adyen just come in and buy them, and that kind of stunts their growth. But I think with Pedro aren't at leadership, he's not somebody who's just going to want to say, okay, I want 20% higher, sell the company. I think he really wants to build it to something long term.
Sure.
Any questions at all, or what are your thoughts?
My only thoughts is, how do you feel about the assumptions where they say 2035, 2050 that this is going to happen, this is going to happen? Do you feel pretty good about those assumptions?
I do. I mean, it may not be 90% of the population by 2050 or 65% of economic growth by 2035, but
Mhm.
I do see that the economic growth is happening and the middle class is growing and digital transformation is growing in emerging markets. And I think the data will show, right? If we see that total payment volume continues increasing, then that really is the lever that's really going to see
Sure.
is emerging markets growing as expected.
So basically, my take is that I'm a wait and see, but I haven't shut the door to it, but I'm a wait and see. Let's see how the earnings come out on August 13th, and then maybe we can revisit and go from there.
Yep, agreed. I think for our portfolio, we're not going to add it unless we both agree with it. So this is going to be one that is on the watch list, and we'll talk about
Right.
it in a couple weeks. But I think overall, we just got to monitor that emerging market trend and the profitability are the two metrics that you and I both want to focus in on. If you enjoyed this video, please consider liking, commenting, or subscribing to help us out as we aim to release weekly content about innovative companies on this father and son podcast.